Greg, great to see you.
Good to be here, Frank.
All right, so we've had lots of people talking about a tradable bottom. People kind of feeling like we kind of hit the bottom. This was tradable at least until, well, maybe the April 2nd tariffs, maybe until earnings season. The time period was a bit nebulous. Does the president kind of reversing course on what we heard yesterday and adding the idea that we may see tariffs in some areas sooner, does that change that thesis in your mind?
It doesn't. I think thinking this is a bottom is a misnomer because we're going to continue to see uncertainty in the near term.
So then it's not a tradable bottom?
I do not think so.
Okay, so you're against that thesis. I just want to be clear.
I'm against that thesis. I think we will continue to see volatility over the next couple of quarters. I'm hoping the year looks a lot like 2023 looked, and once we get through that, as we did in 2023, we see performance in that back quarter. But I think it's hard to call this a bottom when we don't have a solid policy at this point around several things, and when we haven't felt the impact around several policy initiatives, not just tariffs, but the labor supply, the tax cuts, which actually would be a positive in terms of earnings velocity. So I just think that there's much yet to be quantified for us to feel like we've reached a bottom.
All right, a lot more to quantify. I want to play a soundbite from Mike Wilson, Morgan Stanley CIO. He's on our air yesterday. I want to get your take on what he's attributing the volatility to.
Everybody's talking about tariffs right now, but the reason the markets are lower over the course of the last 3 or 4 months has nothing to do with tariffs. It's mostly to do with the fact that earnings revisions have rolled over. The Fed stopped cutting rates. You had stricter enforcement on immigration. You have DOGE, which all those things are growth negative.
So, Greg, your take, volatility, nothing to do with tariffs? That's Mike Wilson's thesis.
Yeah, I think nothing to do with is an aggressive way to put that. Philosophically, I do agree with Mike. This is about a lot more than just tariffs. Like you said, we have a shrinking labor supply. Like you said, earnings have rolled. When we came into this quarter, we were looking for 11% earnings growth on the S&P, and now we're at about 7%. So there are other factors. But I don't know if I'd agree with nothing to do with, because as he himself said, part of this was the Fed taking a pause and a change in posture. And I think a lot of that was driven in part by tariffs and the implication it might have.
One other thing he said, I'm kind of just cherry picking a few things that he said here. He said he likes software and financials in this current environment. He said that would be a key part of a portfolio if he's kind of making a basket. Do you agree with that thesis? Even with inflation, hotter than expected, even though we've gotten some reports that have given us some relief, but also just a potential slowdown in the economy. Are those the two areas you would want to be?
Well, I think you know my philosophy when we have macro challenges, when we have policy challenges, and that is to go where the growth is. And so I think that a lot of what Mike has indicated are sectors that are going to see an earnings tailwind, that are going to see relative growth over relative, despite what's going on at the macro, despite what's going on with tariff. And yeah, software is a great business for that. SaaS, AI, cloud, cybersecurity, all that stuff's not affected.
All right, one other quick question. We had our Steve Leisman on yesterday talking about the dollar and tariffs. The dollar's down about 3% month to date. Shouldn't that make us less worried about earnings season? When the dollar was up, we were worried about earnings season. Now the dollar's softening. Should we be equally worried about earnings season?
Well, I think it goes back to what the policy is actually going to be. We need to be worried about earnings season if tariffs are going to be implemented in such a way that's going to drag GDP growth down by a point. We need to be worried about earnings season if we're going to continue to see a degradation in terms of analyst expectations and continue to see the downward revisions. So lots of factors at play. Hard to boil it down to just one.